So please use the wireless microphone that my colleague here will bring to you if you raise your hands. We'll do one question, one quick follow-up to ensure everyone gets a chance, and then we'll see if we have time for a second round. The governor will, of course, be happy to answer questions in either English or French. Alors, avant de poser vos questions, on vous demande, s'il vous plaît, de vous identifier et je vous demanderai aussi d'utiliser le micro sans fil. Libre à vous de poser vos questions en anglais ou en français. So, John, do you want to start?
John Thompson, Nunavut News. Governor Poloz, has the inversion of the Canadian yield curve made it more difficult for the Bank of Canada to raise interest rates? And how long does the inversion have to last before you would worry about a recession?
Well, we've said over and over that the bank is decidedly data dependent. And of course, so are financial markets. So when long yields have been falling over the last several months, they're telling us that the risk of future inflation is declining and that the economy is slowing, which of course was forecast. Everybody forecast that the economy would slow late in 2018 and in the first half of 2019, and it's certainly coming true. So all those things were forecast. Now, the fact that it has the curve is slightly inverted has people asking the recession question, as opposed to, well, isn't that just a slowdown that we all kind of expected? And so I'm not going to speculate on that, only to say that we're not forecasting recession, as you know. I said it clearly just now. And so, I mean, I respect that, historically the inversion of the yield curve has happened at key points. It's not that it causes anything, but it seems to be coincident. It's much more the case that the U.S. yield curve inversion is closely related to times preceding recessions in the United States, but more so than in Canada. Also, there are other things that you should look at beyond just the yield curve inversion. How did it invert? Well, it inverted by long yields falling, not short rates rising. That's an important consideration because it's data dependence. We're also in a world where interest rates are much lower than they have been throughout all the rest of the history that we look at. So I think we might have to get used to seeing inversions much more often, just as the normal course of events as data fluctuate and as markets read or perhaps even overread those fluctuations. Regardless, we're always going to be closer to a flat and low yield curve, and therefore statistically it's more possible that we'll see inversions that are just innocent ones. And furthermore, usually there are other symptoms around those inversions, such as widening in yield in credit spreads. Don't have that this time. So if it's the economy that's driving that, why wouldn't investors in corporate debt be pulling away from that at the same time? It's not happening. Stock market is doing really well. So for all those reasons, I think we are looking at an innocent inversion that's more statistical than indicative of a recession.
Follow-up?
One follow-up. You said last month that there was increased uncertainty around the timing of future hikes. Today, you again mentioned the mixed data picture and the weight of trade uncertainties on the global economy. Should we still be anticipating a hike as the central bank's next move?
Well, we're just getting engaged now in the process leading up to the April decision. I wouldn't prejudge that process. We'll get a whole new forecast from our staff. We'll get a whole new analysis of the long-term assumptions, such as potential output, R-star. All that research is being updated in time for the April decision. And so I'm just not going to front-run it this time. I'll say what I said in the speech is that the data that we've seen recently certainly support our original interpretation is that we were in for a temporary slowdown. And that's how long it lasts is a bit of a question mark, but we forecast it to last around 6 months, but we'll come back to that in April and update you on that.
Thank you.
Eric?
Eric Hertzberg with Bloomberg News. In your speech today, Governor, you mentioned that the outlook still warrants rates lower than neutral. Do you still expect the rates to eventually rise into that neutral range?
So what we call neutral, which we've said to you before, we estimate to be in the 2.5% to 3.5% range. What we mean by neutral is a place, of course, where policy is no longer stimulating or constraining economic growth, but also one in which all the shocks in the economy have dissipated. So it's a true steady state kind of notion. If there are things still operating, forces still operating in the economy that are, let's say, contractionary in nature, you might call them headwinds, let's say. So for instance, uncertainty about the future of the global trading system, or about the future about NAFTA or CUSMA, all those things can just mean that people put off investment decisions, and we've talked about that at length in the past. If those headwinds are still present, even though everything else is done, then there's more likely to be an interest rate that's below the neutral range, because all it's doing is it's offsetting that drag that's coming from those other factors. Now that's why I've said to people that you never really know when you've reached our star. It's a bit like landing a plane in the fog, and you know it when you hear the wheels or feel the wheels hit the tarmac, and it should be like that. We'll know when we get there. But what number it is will depend very much on all the structural things that are going on in the background. And today I talked about how interpreting the strength in labor markets against the lack of strength in the real economic statistics. One of the contributing factors can be underlying structural change. So one part of the economy is slowing down while another part is speeding up, and you have 500,000 job vacancies as people try to find all that, right? And so that kind of structural change is another sort of headwind that the economy faces until it gets fully there and it's full general equilibrium. And so for all those reasons, I don't think it's really helpful to focus in on that neutral number as it's not certainly a target for us or anything. It's just a guideline. And of course, I could say it's above where we are. But that, well, how we get there or when we ever get there depends on too many things for us to predict. And so, and there are things that aren't observable. So, sorry if that sounds vague to you, but it's a fact of life. So I wish markets would not interpret it such as this fine line and this thing that we're a trigger. So I'm sorry, it just isn't. It's more of a concept, a range, and it's a range for a reason.
Do you have a follow-up?
Yeah, just as a follow-up to that, I'd like to ask about some comments that Federal Reserve Chairman Powell made regarding low inflation being one of the major challenges of our time. Just want to know whether you agree with it. Do you subscribe to a similar view?
Yeah, I think it's an apt description of what we've been through. Certainly in my time as governor, it's been almost persistently, inflation always seems to be a little too low, and there's forces acting that you're trying to offset and get it up there. And we did manage to get it up there. I mean, certainly in terms of the way, I think the distortion-free way to measure inflation is with one or more of our core measures. And they've been at 2% now for pretty well 2 years. And I consider that a significant success given all the preamble that I just gave. And here we are with a slowdown, so you're kind of monitoring that. Hopefully we're not putting the inflation target at risk, but right now we think we're on track. But the point is that it's been hard work, and it's because the legacy of the financial crisis is something that lingers for a really long time. We shouldn't be surprised by that. it's been written about, so people understand that recessions that are caused by financial imbalances give rise to long periods of repair work on those balance sheets, whether they're households or firms or governments for that matter. And so for that reason, they take a very long time to get back to normal. They're not cyclical at all. So you would say, for instance, that the financial crisis arguably took about 7 years to be built up, for those imbalances to get built up, from roughly 2001, and then the housing boom in the U.S. and the bubble and all that, and then 2007 and into 2008, then we get the day of reckoning. Well, if it takes that long, to build up a bubble, it creates a crater after it bursts. It creates a crater that's the same size, and it takes several years, arguably just as many years, to fill it all back up again and get back to normal. So none of this is surprising when you consider history, and so in that context, it's been very hard. The good news is that inflation targets have been a very helpful guide for central banks through that time. If they had been targeting output or something like this, it would have been, less apt. It would have been less able to deal. It was a good anchor, and if you ask people, their expectations are very well anchored. And that is exceptionally valuable. So, for example, when we had the oil price collapse in 14-15, we were able to cut rates in the middle of that collapse, even though the exchange rate was depreciating and inflation was accelerating. People's expectations remained anchored throughout all that, and that gave us a much more rapid adjustment to that shock than we would have had under normal times where those anchors weren't in place. So the framework has served us well, but it remains a challenge to get us all the way home, as I've discussed in many other speeches.
All right, Jackie?
Jackie McKay, CBC North. I'm wondering why you chose to give this speech here in Iqaluit when the speech didn't specifically address the needs of the Nunavut economy.
Well, as governor, when I give a talk, it's always to a national audience, and so we try to choose topics that are of interest to everybody, and we look for topics that are of particular interest to the local community. This community would not be able to grow without international trade. Trade is extremely important to the economic future of Iqaluit, and so in Nunavut. So I see no disconnect there at all. And the fact that many people in the crowd are in the mining business depends totally on trade, and trade restrictions would be bad for their business and for their plans here. I think it fits reasonably well. But when we decide on where to give a speech, it's frankly, I usually get to decide where I'd like to go. When I became governor, I promised to go to every province and every territory in Canada, and now I've done so.
Do you have follow-up?
Yeah. In your speech, you talked about increasing interprovincial trade. How specifically would Nunavut benefit from that?
Well, there's a great deal of trade within Canada, which is slowed down by regulatory barriers. So, for instance, trucking rules vary from province to province, and so certain trucks can cross the border. Other trucks don't have the right lights or the right number of tires, or there are rules like this. Other things that sound even more mundane than this, for example, there's like 8 different standards for hot water tanks across Canada. Well, so you got to have a hot water tank. If you're in Ontario, it has to be a hot water tank that's made in Ontario with Ontario rules. But in Manitoba, it's a different hot water tank. What is the benefit of such rules? If you take those rules away, what happens is companies that make hot water tanks can make one hot water tank and ship it everywhere and save costs, less expensive water tanks for everybody. That's the kind of thing that goes into the kind of calculation I illustrated in my speech. These kinds of regulations, or if we remove them, would be like picking up free money off the sidewalk. Just fix up the regulations and the economy would perform better, and we would offset some of the risks that we see coming from outside of Canada.
So we're pretty much out of time, so I'm going to have to stop it here. But thanks everyone for coming. I appreciate it. Merci.
Thanks very much.